Alrighty guys, what is going up? Welcome back to the Best Investing Money Management channel on YouTube. In today's video, we are going to be talking about NIO. Should you buy NIO stock or is it a sinking ship? Now, for those of you that don't know what NIO is a electric car manufacturer. They're based out of China. They have been known to be the Tesla of China. And over the past couple of years, they've seen crazy amounts of buying pressure exposure, great revenues. The company's actually been doing pretty decent. And with that, you will get a lot of buying pressure. So looking at it, you can see the stock was trading for as low as $1.19. And you can see I bought it a little bit down in here. My average cost was about $11 a share. Now, you can see we've seen this crazy amount of buying pressure in such a short amount of time. Now, anytime you have this much buying pressure where the stock goes from $1 all the way up to $66 per share, you will most likely always get sell-off. And that's kind of what we've seen from NIO. Due to a whole bunch of things. We've seen a lot of things with production problems that NIO came out with, and a lot of car manufacturers right now in general are having very, very hard times with production and supply chain. Tesla, Ford, NIO, and a whole bunch of other ones. So with that, you will obviously get sell-off just because a lot of investors don't want to put their money into something like that. So you can see the stock was trading for 66, sold off all the way down to $33, consolidated there for a while, and now it's sold off all the way down to $22. Now, for me, I definitely think that NIO carries a lot of potential, but anytime you invest into a company or a sector like this, you always have to understand that there's always going to be a lot of competition. And for a consumer, that's fantastic. But for an investor, that just brings more risk. So let's draw out the support and resistance lines for NIO. So you can see it does have some resistance right up here at about $55. It hits it several times and just has that natural sell-off near and around there. It does have some more support all the way down here at about $32. So you can see it hits it several times. And every single time we just see that natural tendency to get buying pressure near and around there. That's representing it as a support. So now looking at it here, you may notice that this thing has continued past that support all the way down here to as low as $20 a share. I definitely think we will start seeing a tendency to see that $20 a share act as some support. If we actually go ahead and we look at a better chart here, where are we at? Let's go to the 4-hour chart so you can see it a little clearer. Let's go ahead and draw this out like this. Boom, boom, boom. So the $20 mark is a great support for NIO. You can see it hits it several times, right near and around there several times, like I said, representing it as a very strong support, right? So this used to be resistance. Now it's going to be acting as new support. Taps it several times, classifying decent amount of support. So moving support here, and we do have more at 32, and we do have a resistance up here at $63 and a little bit down here, in the 50s. So about right there, I would classify would be the decent, more common resistance. It'll hit it and you'll start seeing sell off near and around there. So right now, answering that question, is NIO a sinking ship? I definitely think you will have to look at some of the finances for this. So you can see they're actually doing very well on their revenue, up 116%, but that's the only thing that they're doing pretty decent on. Net income is down 140%. Diluted EPS is down 85%. The net profit margin is actually down 11%. This is pretty much, is the company profitable and by how much? Right now, NIO is not profitable. It does take quite a long time for a startup, especially a car manufacturer, to become profitable. It took Tesla several years just to even make a nickel. Now they make a lot of money. Cost of revenue is up about 98%. And looking at their past couple of earnings, you can see it's very, very spotty. So for me, answering that question, should you buy NIO? I definitely think NIO carries a lot of potential, but also does carry quite a bit of risk. So for me, I definitely would go into the mindset of, okay, I have to get this at $20 a share, right on that support line, and I'm not going to put more than 5% of my money in this. So what that means is for every $100 you have invested into other stocks, other ETFs, other assets, I wouldn't put more than $5 into NIO just because of the risk level. And obviously, you want to get it near and around that support. And the thing is this thing could easily sell off to $15, $14, but it also could spike back up with very good earnings or very good, a catalyst or something along those lines. And that's what is the higher growth, higher risk portion. So yes, it does carry risk, but I definitely think it would be a good idea to pick up a couple of shares right near and around that $20 mark, right near that 20, and you could possibly even swing trade it from 20 to 31 and make a decent amount of money just off the swing trade. There's always a ton of options. NIO is a good stock. You just have to understand higher risk, higher reward, and go from there. We'll see you guys. Remember to stay happy, guys. Stay positive. And don't forget, you guys can sign up with Moomoo and get 5 free stocks. So make sure you guys check that out. And don't forget to check out my course and my merch. And we will see you guys later. Remember to stay happy, stay positive, and stay safe. Take care.